Welcome everyone to the IMF conference on COVID-19, on the COVID-19 pandemic in developing countries. We have a great conference ahead. I'm Geeta Gopinath. I'm the chief economist of the International Monetary Fund, and I wanted to share with you some thoughts about how this pandemic is impacting developing countries. I won't go into details because we have a great set of panels ahead, but just to lay the course for it. This year has been an extraordinary year for countries around the world, and it has been particularly difficult for developing countries. And the countries I'm talking about here that we will focus on are low-income countries and lower middle-income countries. So this is not a conference like China, but about the countries in the bottom 100 in terms of per capita income. Firstly, this crisis has been unlike anything these economies have faced. It's a perfect storm. Now, of course, the origins of the crisis is a pandemic. It's a health crisis. For some of these countries, the health crisis in and of itself has not been as severe as it's been in advanced economies. But the fallout from the pandemic around the globe has hit these economies very hard. Even in their own countries, in responding to the health crisis, many have had to put lockdowns that has deeply impacted activity. As we've seen advanced economies go into deep recessions, middle-income countries go into deep recessions, many of these economies have faced a big drop in external demand. Several of these economies are not very diversified. They rely exclusively on tourism exports, or they rely very heavily on commodity exports. And we know that these sectors have been hit very hard by the pandemic. So, they've been hit directly and indirectly through this crisis. And importantly, they have had difficult time in terms of being able to finance the response to this crisis. Now, we've seen that globally there hasn't been a global financial crisis thanks to the extraordinary measures taken by governments around the world. But there are many economies that are in the lower income bracket that have basically been cut out from external financing. Their internal revenues have dried up. So in terms of their policy response, they've had a much harder time. So these economies have had a difficult time in terms of resilience. They've had a difficult time in terms of policy responses. And these are the challenges these economies face, and the pandemic is not over. So this is going to be a challenge that continues to be there going forward. If you look at the policy response, you have advanced economies that have deployed, in terms of fiscal support, 20% of their GDP. Emerging markets, that number comes down to 6%. And if you go to low-income countries, that number is 2% of their GDP. So you can see the very large variation in support measures that have been deployed around the world. So what are we seeing now in terms of the consequences? Firstly, we are seeing for the first time since 1998 projected increases in extreme poverty around the world. By World Bank estimates, that number would be over 100 million being added to extreme poverty over this year and next year. We are projecting, based on our October World Economic Outlook estimates, we have the per capita income of emerging and developing economies, excluding China, projected to fall by more over this year and next year as compared to advanced economies. We have, for instance, the African continent, we have a projected drop in per capita income of 5% over this period. So we are clearly seeing signs of divergence in terms of prospects across countries in the world. And unfortunately, this is not going to end soon. We have good news on the vaccine front. And that's terrific for the global economy as a whole. But we know that it's not available universally and at the same speed and at the same time scale across countries. So, next year, 2021, is a year where we expect to see, the end of this health crisis in many parts of the world, but it's not going to be that case everywhere. Now, as advanced economies who have already pre-purchased many of these vaccines, as they use them, as they vaccinate their population, economic activity should come back strongly. That, of course, benefits all economies in the world, including developing economies. So there's that positive spillover that will come from external demand. But at the same time, we have to keep in mind that we cannot forget the low-income countries and the low and middle-income countries once a big portion of the advanced economies have been vaccinated. The problem will remain. We have to make sure that resources are deployed to make sure these vaccines are globally available. We cannot forget these countries, and this is absolutely important. Let me just speak very briefly to what the IMF has done to help the developing countries. I'm not going to go into details. Our Director of Strategy, Policy and Review Department, Jela Basyoglu, will go into this in more detail in her comments. But just to mention that the IMF has stepped up. We have provided emergency financing, concessional financing to our low-income members. We've been providing debt service relief. We have provided policy advice on multiple fronts on how to deal with this crisis. But again, a lot more needs to be done. So let me just step back and say, okay, here is where we are right now. But there are going to be several legacies that come out of this crisis. So because of the difficulties that these countries are facing, we expect to see hits in terms of their fiscal situation going forward. Several of these economies entered this crisis already with high levels of debt, which put them in situations of debt distress. They will need relief. Some of them will need outright debt restructuring. So that's one important challenge out there that has to be faced. Many of these economies are now diverging from their ability to raise livelihoods, raise per capita incomes in their countries, achieve their sustainable development goals. This crisis has hit them and put them on a trajectory that moves them away from achieving these outcomes. And the international community has to play a very important role to provide the needed resources to make sure that this doesn't happen and we don't enter a world where we see very diverging prospects around the globe. It's for the benefit of all countries when everybody does well and recovers strongly. So this conference that you have tuned into is where we squarely address the issues, talk to very eminent panelists, as you will see in the next hours, on how to deal with this crisis in developing countries, what has already been done, and importantly, what still needs to be done, not just to deal with the crisis, which is still not over, but also post-pandemic, how do we bring back stronger inclusive growth in these developing countries. So there is a great set of speakers that we have today. I will be starting out by speaking with Professor Mark Lipsich. I'm going to come to that very soon. But as you will see, this conference covers the health aspects, which will be the first panel. Then we cover what policies have already been implemented, what the challenges have been, what the challenges are in terms of dealing with this crisis, which is the second panel. And then we conclude with the third panel called Healing the Scars, which is how do we go forward post-pandemic in dealing with the problems of the developing countries. So we have a full schedule, and I would like to bring in the panel, Mark is join us now.
Hello, good morning.
Mark, thank you for joining us. Just as an introduction to everybody, Mark Lipsich is a professor of epidemiology at the Harvard School of Public Health and the director of the Center for Communicable Disease Dynamics. So we have a real expert on the issues, and the first panel is squarely about the health crisis, the pandemic, where Mark is an expert on these issues, and so just the right person for us to speak to. Before I jump in, I also want to thank all of you who have contributed questions through different platforms in terms of what we should be asking our panelists. So I really thank you very much for this, and we will try our best to incorporate those through the day in terms of the questions we ask. So let's dive in. Move this away. I'm trying to minimize this picture. Okay. Hi, Mark. I hope you're well, and I hope you can hear me.
I hear you well. Thank you.
Wonderful. So thank you. Let's start with the pandemic, and if you look at the data, what we've measured so far in terms of case counts, in terms of case fatality rates from this pandemic, you certainly see that low-income countries, developing countries, many of them, now some have been hard hit, but there are on average low-income countries, especially countries in the African continent, have not been hit as hard by this pandemic. If you do this in terms of per capita terms, those numbers are way smaller than what we see, for instance, in advanced economies. So just to start with, just what have we learned in these last, 8, 9, 10 months now or more in terms of why do we think that's been the case?
Yeah, thank you. I think that's the trillion-dollar question. And I think one thing I always say when I'm speaking to economists or physical scientists or people who are used to measuring things consistently is that epidemiology of a new disease is like inventing your instruments at the same time that you're trying to use them to measure something. So it's like a little bit like counting cases is a little bit like saying how many liters of water fell in a cistern without knowing the area exposed in that cistern. It's the wrong unit of measurement, and we're constantly trying to take the wrong unit of measurement, like confirmed cases, which depends on testing and all sorts of other imponderables, and convert it into something that's real. So understanding the observation process. And that's changing in space and it's changing in time, and imperfect in different ways. So I think one of the things that we've been learning is which of these measures are more meaningful and which of the measures are less meaningful. As you say, on what traditionally epidemiologists have focused on when measurement is imperfect is per capita death rates or per case death rates. I think one thing we've learned is that is not always the best measurement tool, in the sense that deaths are underreported in many places, and especially in some of the places we're considering. And so I think my kind of current heuristic is that hospital overflow along with other measures, is a more meaningful measure because it actually measures in some somewhat reliable way the burden of severe cases in a population. Having said all that and noted the various uncertainties, I think a few things are clear. There are some developing countries in the low and low middle income bracket, and I'll take Rwanda as an example, where it's very clear that the experience has been relatively mild from a health perspective, and it's fairly clear why. So there aren't that many countries like that, but that's the category that's sort of easy, or not easy, but at least understandable. There's been a very intense response. There's been an enormous amount of testing. There's been very stringent lockdowns, a relatively acquiescent population, and spread has been contained to a large degree. Then there are places with high burdens of cases as measured by serologic studies, like many parts of India. There have been major surveys, for example, in Mumbai and in the various cities of Karnataka and elsewhere. And it's clear that especially in slums, but also in some rural areas, actually, I'm not sure quite what's been done in India, but in Bangladesh, there's been sero surveys in rural areas, and also high seroprevalence. So there are a lot of people have been infected, and the death rates seem to be lower than we would expect. Some of that is due to younger populations and steeper pyramids. Some of that is almost certainly due to underreporting in places like India. And then some of it is uncertain. And then there are countries like South Africa where in preparation for this, I was hoping to have something intelligent to say about South Africa, and I don't, but I do have the consolation of knowing that Slim Karim, who's their leading infectious disease expert, has been publicly saying he's fully confused about what's going on and why the rates have been comparatively low. So there's sort of a range of artifactual explanations and real explanations for the different experiences across the developing world, I think.
Thank you. Obviously, this is hugely important from an economic perspective, because when the pandemic first hit countries, the advice was to early on, as best possible, put lockdowns in place so you bring down transmission rates. That gives you time to build up healthcare capacity. And then you slowly open up with lots of testing and contact tracing. Those are the best kind of policies. Not knowing why is it that some countries are being affected harder than others, makes it hard to kind of tailor the advice in terms of what countries should do. So, for example, in India, as you mentioned, indeed, the sense is that there are, of course, way more people who've been infected by it. But even age adjusted, the recovery rates are better, the death rates are better. Now, again, these are incomplete studies and we don't know the answers. But suppose we were to go back in time, and or rather in preparation for the next time this happens, what would we need in terms of data collection efforts or surveys, or is that the missing piece? Like, why is it so much harder to figure out? Is it the reason X country is doing better is because at some point they were exposed to a similar virus in the past, or at some point they had previous kinds of inoculations that have given them some safety from this thing? I mean, I'm trying, where does the challenge come from? And if we had to fix it, what would we do?
Yeah, I think some of it's fixable and some of it is a bit imponderable. Thailand's a good example, slightly outside the income bracket, but again, there are competing hypotheses ranging from prior immunity to genetics to customs of social distancing being sort of built into the society. And Thailand had early and quite numerous introductions and has really done very well. But I think, in terms of the things, and answering those questions at the country level is going to be a challenge, because countries differ in many ways, and most of these are not accessible to controlled experiments or even to good observational comparisons, because there's so many moving parts. But I think the parts we can understand are, if a country is reporting better numbers, how complete are the death reports? What is the hospital capacity compared, and the accessibility of hospitals compared to the case numbers? Using excess deaths of all causes when in countries like India, where figure I've seen is 22% of cases have a cause of death. So cause of death specific data are comparatively uninformative. So looking at all cause excess deaths is helpful. and um, and the importance of random samples for serologic surveys to see past attack rates, and for virologic surveys to see current prevalence of infection, uh, I think is absolutely central. And that has been very spotty. I mean, I spent a lot of time on groups in Massachusetts where I live trying to set up such kinds of random surveillance. Didn't happen. Rwanda did it. Rwanda has people uh, out on the streets stopping cars in traffic. It's not perfect random sampling, and it's got its own biases, but they have a nationwide approach. An even better approach is done through national statistical offices, as in the UK, Spain, and India, for example. So I think truly random samples, which require a little bit of cooperation from the population, are really critical to understanding the course of transmission. Then the severity is another layer that's really confusing, um, and I think is somewhat helped if you can get a decent denominator from a random sample um, in terms of the number of cases. So these case fatality rates that have been reported as lower in India and higher in some other places are really very dependent on who's tested and how many people are tested, and on whether there's a lot of testing of random people um, or of uh, um, only the most severely ill. So I think that number should be basically exiled, the ratio of deaths to confirmed cases, because I think both numbers are unreliable. And serological denominators are an improvement, but there's a lot to do to get an infrastructure together to answer the sort of statistical questions of what are the prevalence and incidence, and the scientific questions of why is it different from one place to another.
Great, thank you. So let's move on to this new phase that we're in right now. I would say, I hope you would agree, that the news on the vaccine front is very encouraging. This happened at a fast speed, and there seems to be multiple vaccines that are hitting the target. And so 2021 could be the year when we see at least we're definitely at the beginning of the end, if not the end. But at the same time, we know that this is not universally available. There are all kinds of challenges in getting it to developing and low-income countries. So what do you see as the challenges in making sure that the pandemic truly ends, in terms of getting the vaccine to low-income countries? And do we need the same level of 70% coverage of the population everywhere in the world, given that some parts seem to be reacting very differently to this pandemic than others are? So just your thoughts on those.
Yeah, a lot of questions there. So I think the first thing to say is the good news is good. It's good news about the two vaccines that have been most prominent, the two mRNA vaccines from Pfizer, BioNTech, and Moderna. It's pretty good news about the AstraZeneca vaccine, although the trials had some road bumps. But I think the overall news is encouraging, including what's come out in the last day or two. And it's also encouraging on a general level that this strategy of immunizing against parts of the spike protein is going to work, and that updates our priors for the other vaccines that have not finished phase 3 or have not even had interim analyses of phase 3 trials. So I think everybody is breathing a sigh of relief on the front of, yes, we have some vaccines and we will probably have several vaccines. The flip side of that, as you say, is, well, actually, one limitation to what we know at the moment is there's almost no data. There's no data for the mRNA vaccines, and not very much data about the AstraZeneca vaccine in terms of whether it prevents infection and transmission. And so that 70% number that you mentioned about potentially what would the herd immunity threshold be is a reasonable estimate if the vaccine were as effective against transmission and infection as it is against symptoms. It doesn't seem like the AstraZeneca vaccine is as effective, and the other ones we have no data. So I think that's a big question mark, and a reason why vaccinating people at high risk of complications, if you can identify them, is a more conservative strategy, because we do have evidence that it works in that way, in a direct protection mode. And we so far don't have good evidence, full evidence about the indirect protection. The issue for developing countries is one of timing and supply, as you point out. The two first vaccines to be developed are not part of COVAX, the WHO's initiative that aims to supply for 20% of the world's population. That's partly because they have cold storage requirements and for other reasons. But the AstraZeneca vaccine is part of that, and not only that, but is also being produced under license in India by the Serum Institute, if I remember correctly. And that has the advantage of not requiring cold storage, being less expensive, but unfortunately, seemingly slightly less effective. The estimates that I've heard most recently are that there might be a trickle of vaccines into COVAX in the first quarter of next year, and that it will really depend on whether the AstraZeneca vaccine and the two that are most advanced, or two of the others most advanced in phase 3 trials, Novavax and Johnson & Johnson, which are also part of COVAX, are able to be produced in large amounts, and for the latter two also are effective. There are also going to be major issues of distribution for a variety of reasons. One is varying levels of vaccine confidence. The vaccine hesitancy is not as big a problem in many countries as it is in some developed countries, but a recent survey showed that significant concerns about vaccines in Sierra Leone and reasonable levels of concern in Colombia, of people saying they would probably not take the vaccine if it was available. Higher levels of confidence in other places that were surveyed. And also the issue that that these vaccines will need to be tailored to often a 2-dose schedule. So migrants who have been in many countries a major source of transmission, in part because of fear of health authorities and for other and crowded conditions and other reasons. 2 doses for a migrant population is going to be really challenging. And I think most importantly, just numbers. The numbers that have been ordered by rich countries are very large. Canada has ordered 9.5 doses per capita for its population and is talking about redistributing them. But in addition to COVAX, I think there are going to have to be some significant bilateral arrangements in which countries that have ordered more doses than they need share those doses. And it's worth remembering historically that in 2009, during the flu pandemic, in September, before there was any real supply, and all of it on sort of future plans, there was a pledge of about 200 million doses by the US and some other countries, 8 other countries, and 2 manufacturers to the developing world. That's not a ton, but it is a baseline, and it's something that I hope that the new administration in the US will see as a good starting point to be improved upon, because we have been notably absent from the international efforts.
Indeed, Mark, there is so much more that needs to be done on the international front, including, like you said, on the positive side, if we have so many vaccines that are successful, then we might actually have, in some sense, a surplus in many parts of the world, and that can be reoriented to developing countries. We're running out of time, but I just wanted to ask you for any last thoughts you might have in terms of preparing for a future pandemic. Obviously, this is not the last one that will hit countries around the world, but is there some lessons learned for how, if we were to put in steps for pandemic preparedness for the future?
Yeah, well, I think one lesson from some of the largest countries that have had some of the biggest troubles is you need leadership, and all the institutions in the world don't help if you don't have leadership that is unifying the response. And that's hard to guarantee in the future, but is essential. The other piece is on vaccines. Through the establishment of CEPI, a really remarkable piece of scientific foresight, we have, at least for some countries, access at an unbelievable pace, starting yesterday with the first outside of trial vaccine in the UK. It's clear that we need that kind of speed and excellence for diagnostics, which have been a much more challenging piece in this event, and for data and sort of infrastructure to gather data and make sense of data. The analytic capacity and just the capacity to generate it has been a big fire drill of a lot of academics and people without really the resources to do it on a large scale, trying to do their best, and we need the data infrastructure.
Thank you, Mark. I think we're right at the end of our time. Thank you so much for joining us. I know that you've been functioning with very little sleep, and so given all the demands on you, I really thank you for joining this panel. And there's obviously a lot more to be learned, and I can see the need for us to have more conversations going forward. Moving on to the next phase of this conference, as I mentioned at the IMF, we are, our goal is to continue to strengthen our engagements with low-income countries, lower middle-income countries, to understand their specific issues. And later on in the day, and I should have mentioned this earlier, but later on in the day, we also have conversations. We're going to listen to civil society organizations in these countries to learn more on their specific challenges and how we can also help them, help the countries better. But for now, I'm going to hand over to the next panel, which is on pandemic policies for people. There is a fantastic group of panelists. I'm going to just hand it over to the moderator, Adva Saldinger, who's the senior correspondent at DEVEX, to take this over and to introduce her panelists. And I look forward to listening to what everybody has to say for the rest of the day. So, handing this over to you, Adva.
Good morning, everyone, and welcome. My name is Adva Saldinger, and I am a reporter at DevX. And, we all know what the sort of picture looks like today. The economic outlook in many emerging market and low-income economies is projected to be significantly worse than was expected before the pandemic. Uneven recoveries between advanced and low-income economies are going to further exacerbate inequality gaps. And we're already seeing sort of a disproportionate impact on women and youth in particular. The IMF has obviously launched an unprecedented response, lending more than $102 billion to 83 countries since March. But more is still needed. And so I'm really looking forward to this conversation today to really get a sense at a country level what the economic outlook looks like, how countries are responding, and what policies are really needed as we move forward in this recovery. One housekeeping note before we dive into the conversation. I wanted to thank those of you who had already sent in questions. And I did want to say that we want to get to as many of those questions as we can. You'll also have a chance to submit questions throughout our discussion. In order to do that, you can go to menti.com, it's menti.com, and you can type in the number 9106394 to submit your questions. And we'll be sort of getting to those throughout the conversation as they come in, so please feel free to send them in. And now it is my pleasure to introduce to you our wonderful panel and really dive into what I know will be a great and engaging conversation. So I wanted to introduce Reza Bakir, who's the governor of the State Bank of Pakistan. Rachel Glenerster is the chief economist for UK's FCDO, the Foreign Commonwealth and Development Office. Ricardo Hausman, who is the director of the Growth Lab at Harvard Center for International Development at the Harvard Kennedy School. And Patrick Njoroge, who's the governor of the Central Bank of Kenya. So thank you all so much for being with us today. And with that, Reza, I wanted to turn to you first. I wanted, we're at a place now where it might be a little bit hard to remember those early days. And so to ground us in, what has happened over the last few months and really the severity and the magnitude of this crisis, can you set the scene for us about what that outlook was in those early months, in March, April? What did it look like, and what were the conversations like about how to respond to this pandemic?
Thank you, Adva, and it's a great pleasure to be here with everybody else. Warm greetings to all the other panelists. And Adva, it seems quite some time ago when the pandemic struck, but it is extremely useful to go back and I think just spend a few seconds of how that was. And I have to say that first and foremost, our memories of that are the memories of when everything came to a grinding halt in this great lockdown. I live in a city, Pakistan's largest city, Karachi. It's a bustling metropolis, one of the largest cities in the world. And this city had gone quiet. And the earliest memories of dealing with this pandemic are the quietness that comes with the lockdowns that came in all across the world. Now, when I look back and the crisis struck, there were at least three challenges that at the central bank we were most concerned about. And the first was the lives and livelihoods question. And of course, it's a question that's extremely important in all countries. But let me tell you what I at least was thinking about back then and what were the biggest challenges that I was seeing. Pakistan is the world's fifth largest country. And it's a country where there are a lot of poor people. According to a World Bank estimate, a quarter of the people, so that means about 50 million people in Pakistan, according to the World Bank's estimate, live below the poverty line. That's more than the entire number of people who live in Spain. So the first and foremost challenge and worry was about the impact and the toll that this pandemic would take on the poor. The haves generally have some savings buffers, they can get by, but the have-nots who live hand to mouth, they could face a real challenge. So Of course, the biggest role here was from public health agencies, where a central bank doesn't have much role. But our key focus, therefore, to try to do our part as a central bank in the lives and livelihood challenge was to try to keep solvent businesses afloat. And our thinking was that if we can be successful in minimizing the number of bankruptcies, then we would play a major role in trying to keep food on the tables of those who don't have any saving buffers. And one of the flagship programs that the central bank did was to prevent bankruptcies. This was a program to extend principal loan repayments as well as to give incentives for loan restructuring. And in total, this program injected about $5.4 billion into the cash flows of businesses. And that's about 2% of GDP. And today, we have had very little increase in the non-performing loans ratio, very little increase in bankruptcies. And so that was our number one challenge, was to try to minimize bankruptcies and therefore try to support jobs. At a much broader level, one of the challenges that I faced was that COVID struck Pakistan just as Pakistan had begun a IMF program to restore sustainability to our external and fiscal balances. And, like all IMF programs, they are painful at the beginning. There's a reason why the IMF is not liked in many countries, because there comes pain right at the very beginning. And when we started this program in June of 2019, and we had to do the tough stabilization measures, we were just beginning to see the payoff from stabilization to growth when COVID struck. And so at a broader level, one of our worries at the central bank was that if we have a very deep recession, it is going to undermine all the support we had built amongst domestic stakeholders for the necessity of stabilization policies to lead the way to growth. And so at a much broader level, Adva, that was the second challenge that we felt, that we don't want all the domestic stakeholders to set aside the need to restore sustainability, because after we get through COVID, we will need to come back to addressing the fiscal sustainability and other challenges that we had. And last is Pakistan had just transitioned to a flexible exchange rate as part of this IMF supported program. And this was, think of it as a newborn baby, our flexible exchange rate regime. The largest test ever that you could throw in the way of a newborn flexible exchange rate regime was a crisis like no other. So our concern was whether this market-based exchange rate system would survive this largest test ever that emerging markets have faced since World War II. And we've come out of it having done okay, with the rupee at its worst, depreciated about 8%. And if you look at the distribution of all emerging markets depreciations, it's pretty much in the middle. But at the beginning of the crisis, we did not know what would transpire. And these were some of the challenges at the central bank that we were struggling with right when everything unfolded and the magnitude of uncertainty was so large, and we did not know which way things would turn out.
Great. Well, we'll come back to the issue of fiscal sustainability, because that is at the heart of the challenges for many countries later in the discussion. But Patrick, I wanted to turn to you next and get a sense of the situation in Kenya. There is expected to be a return to some growth next year in Kenya. You've cited increased exports in recent months, but the tourism industry has been hit very hard. So I wanted to just ask, how are you managing this recovery through the uncertainty of these shocks? And what about the future of potential shocks? Could the economy withstand a future lockdown, or is that off the table at this point?
Thank you, Adva. And again, greetings to all the participants, and delighted to be with such a distinguished set of panelists. I think first, I completely agree with some of the issues or the way Reza has just cast the concerns that faced him in Pakistan, and that is really no different from the concerns that we faced. But I would want to emphasize a couple of things before going into the state of play today. First is, when we started off here in Kenya, our number one issue was to reduce the health risk. Really, this was in terms of the bank staff and also customers that will be coming into the bank branches, et cetera, et cetera. And here, the interesting thing is we all went to the same sort of training, et cetera, and we all have disaster recovery plans and guidelines. And just to say that those who are not fit for purpose. So they are aimed at systems, fixed assets, etc. And the pandemic was about people. So we had to very quickly put together pandemic response guidelines. Within 3 weeks, we wrote this and circulated it to all the banking institutions, etc. And this obviously helped protect the health of the workers, etc. And there are various things that I think have now become, let's say, second nature around the world. Secondly, we also did some work to harden the IT systems. We knew that, it became obvious that we'll need to depend a lot more on IT systems. So at the back of that, not necessarily talking loudly, very quietly, worked with institutions to harden their IT systems and also to change to ensure that the risks are minimized, hacking, etc., and all that. And as you can imagine, a lot more people would be working at home, from home, and that had its own risks. If you are connecting to systems that in the past were not, let's say, tailored for that, etc. So that was the other thing. Another thing we did, obviously, was to focus on reducing the use of cash. And here, fortunately, we have the digital rails that we've built over the last 14 years. And this really involved using more and more of the mobile phone sort of wallets, etc. We've already been on that journey of digital transformation. And so this was a time when actually this paid huge dividends. And so what we did is to increase the limits, for instance, on the amounts that can be held in wallets, e-wallets, also reduce the cost for waived all costs for transactions less than the equivalent of $10 US, etc. And this actually was beneficial. It increased the number of transactions that were taking place on the digital platforms, and indeed reduce the human traffic into the banks, etc. So that was generally the points I wanted to emphasize. In addition, of course, to the issues that Reza mentioned in terms of restructuring of loans, etc. You asked about how things look going forward, and I think here, obviously, we are now very hopeful. Let's see if this amounts to a substantial change, as it were, in terms of the promise of the vaccines, etc., that have come recently. But in terms of potential shock, it is true that the lockdown was very hard. It hit quite a bit the tourism sector and the services sector. But fortunately for us, the agricultural sector, which is mainly rural, was not hit, was not affected by this COVID pandemic. As a matter of fact, the agricultural economy this year is expected to really have rebounded or have a significant growth compared to the average and over the last few years. So that is the positive side. So I think there is some buffers, as it were, that we have. However, the real concern is on fiscal. And that is where I think the buffers are much more limited. And I think this is a question that you can take forward or we can discuss, as you mentioned a moment ago.
Absolutely. We will get back there, and I'll push you a little bit more also about what that means for spending, future health and social issues as well. Rachel, I wanted to turn to you now. This crisis has obviously put considerable strain on aid budgets, and including in the UK. We've all been sort of following what's been happening there, and it's a time when aid is probably more necessary rather than less. And so I wanted to ask you a little bit about how FCDO is prioritizing where its more limited funding is going now, and sort of how you're working with partners to figure out what their needs are, and really what donors should be doing to support sort of the myriad of challenges that countries are facing today, from the immediate health response to the economic shocks.
Great, thanks, and great to be on this panel, a lot of old friends. And really important and difficult questions. You're right that this is a time of extraordinarily difficult decision making, and really tough choices to be made. I think all of us in this group have had to go through making really difficult choices. But in the summer, well, in sort of the early phase of the epidemic, going into the summer, and then we're going through a second phase now of thinking really carefully about our priorities, because, as you say, kind of the opportunity cost of any money is now higher than ever before. And we made quite a clear, the set of priorities actually to think it through. And the first thing we said is anything that we can do to limit the underlying causes of the suffering. So, on the health side, but also anything that lessens the economic impact of this, that has to be our priority, because that's going to provide the biggest return and the biggest relief for people. The second was mitigating in those areas where there could be potential long-term impact. So, we've already heard successful companies closing down, that would have long-term impacts. Malnutrition, we know, has short-term malnutrition has long-term impacts. So kind of mitigating where there were risks of long-term scarring was our second priority. And then, there were a few things that we wanted to preserve, somewhat through this crisis because of the long-term consequences, and I think of climate change spending. So we said we won't shut down all climate change spending during this difficult period. Then we talked about channels. What was the most effective way of using our money to get the biggest impact? So, where it was multilateral, we went multilateral. Where it was bilateral, we went bilateral. And again, debt relief, for example, we thought was an important channel that would provide immediate relief to the countries that were suffering most. So we put quite a lot of emphasis on that. But let me just explain a bit about how we took those kind of very broad priorities and sort of led it through into decision making, because I think it's quite
and just to ask you also to tell us a little bit about this sort of second phase of decision making that you're in now. Yeah. So really, what can we expect down the road?
Yeah, and I think those principles will continue to hold. In the the biggest thing that you can do, and I was involved in some calculations on this and doing some economic analysis around this, to the extent that we can improve the health situation and allow economies to open up, that has huge returns. So in particular, vaccines has been an emphasis of our work in the past. We put early money into the R&D, we put early aid money into R&D, making deals with companies in exchange for them then promising to provide appropriate pricing in the future. So an early investment in CEPI, and then building COVAX as a multilateral response that all countries could use to access vaccines. So that was a huge emphasis early on, but it's also a big emphasis now, because that will help allow economies to open up. And that's sort of really more cost effective than working on mitigation, although we also have to work on mitigation. So vaccines has been a huge emphasis, not only of our time, but also of our money. And then also providing countries with the advice and information. So, getting data about what's actually happening. That's not very expensive, but I think it's quite important for countries to be able to know, what's the extent of the virus in their country, and it allows them to respond more in a more evidence way. So, working with a team in Pakistan, for example, to help them think through sort of smart lockdowns, that sort of approach. Then on mitigation, I mean, humanitarian, obviously important, but I think it's interesting the discussions we had about the multilateral response, so the bank and the IMF, and pushing them to be as flexible as possible was really where we thought, our money could never be as big as the IMF and the World Bank. So giving some money to allow the bank to lend more to low-income countries was sort of a highly leveraged position for us, not leverage in our influence, but leverage in that we get more, our money pays off more effectively. And again, the banks working through the World Bank, again, was a sort of effective way of leveraging and getting the sums of money that we need to get out there. And then there's and debt, similarly, I think, first pushing for an immediate pause of debt relief, but now in the current reign.
I think we'll come back to debt in a minute. I want to bring Ricardo into the conversation, so I promise we will get back there.
Okay, and then I think countries also have to think about where their comparative advantage is. Because there's so many different things. So what is it that the UK has particular specialty in and can help with? And examples of that were remittances, trying to keep the remittance corridors open during this crisis, because we know actually a lot of money goes through remittances, and trade credit similarly. So we did a lot of work on keeping trade credit flowing to prevent that, prevent companies and trade collapsing with long-term consequences. But I'll let you move on to Ricardo.
Great, and I'll come back to you on that trade point as well later, because I think it's interesting to explore sort of the role of trade in all of this as well. So Ricardo, turning to you, I wanted to, one of the things we've seen in Latin America is even middle-income countries struggling with, some of the issues that normally face low-income countries. And so I wanted to get a sense from you in the region, how you see some of these challenges playing out in the next year. What actions do you think, obviously each country is sort of its own, in its own situation, but how do you see, what actions countries need to take to sort of position themselves to be in the right place in terms of the global response?
Middle income country point of view, the situation is quite interesting. Early on, everybody locked down, but the disease was really a rich country disease. It was ravaging Europe and the US. People in the rest of the world were locked down, but without much infection rates. Right now, among the top 10 countries in terms of death rates is Latin America. Many Latin American countries are there. Now, if you look at the Google mobility data, the countries that have the most severe lockdowns were in Latin America. So this kind of suggests that we had lockdowns, people stopped going to work, people stayed home, but for some reason we were unable to contain the disease. So there's a lot of work to be done on how to increase the effectiveness of lockdowns, smart lockdowns that Rachel referred to. I think that we still have probably a year ahead of us at least before we get a critical mass of the population vaccinated. So we're not done with managing social distancing intelligently. We've seen in Europe dramatic declines in infection rates after lockdowns. We don't see them in Latin America to the same extent. We lock down and the stuff doesn't go down the same. Secondly, while we've seen in many developed countries fiscal policy respond quite aggressively with increases in spending in excess of 10 percentage points of GDP in several countries, in the US and Canada and Japan and so on. We see increases in spending on the order of 3 to 4% of GDP. And as a consequence, I think you saw collapses in output that are bigger. So for many countries, including Ecuador, Peru, Mexico, Colombia, and so on, this is the worst recession since we have data, since the 1950s. Okay, so this is the biggest recession ever, with enormous collapses in employment. So this begs the question of what could fiscal policy, monetary policy, macro policy in general have been? What does it need to be going forward? And I think there countries need to work on, first of all, maintaining market access. And this is something that has happened, that even countries that are not well rated, like Honduras, Paraguay, got to go to market at reasonable interest rates and so on. So, for example, in Latin America, nobody wants to hear too much to talk about debt forgiveness, debt restructuring, because they want to say, no, market access, we want to keep our market access. So that forgiveness is not for middle-income countries so much, but they need to assure that market access. And I think that that market access allows them more fiscal flexibility in the short run, but it needs to be anchored by some commitments in the medium term. And maybe in the next round, we can talk a little bit about what can be done on the fiscal side. And my other concern is that because this recession is so deep that many companies are going under, other companies are losing their equity, that when we get to the other side of this thing, there's going to be an equity shortage in the system, that companies will have very little equity, and maybe banks will have little equity. And that's going to slow down the recovery, because monetary policy can lower interest rates and do whatever. And we've seen some very interesting things happen in central banks that have inflation targeting and floating exchange rates, like, say, Chile, Peru, Colombia, Mexico. But monetary policy is very ineffective if borrowers don't have equity and if banks don't have equity. But
we'll come back to that.
Yeah.
Reza, it looked like you wanted to jump in there.
I did, Adva. I had just wanted to bring out something that Ricardo mentioned, which I think is going to become the core of the issue, and that is market access. And we've spoken about fiscal sustainability, and one of the challenges, I think, that exists for all the countries in all the discussion on debt relief is whether official creditors are going to require comparable treatment from private creditors before they agree to give debt relief to a debtor country. And this is the conversation playing out. And what it is going to end up doing, in my view, is, as Ricardo said, in Latin America, no country wants this talk because they don't want to compromise their ability of market access. But if there is this talk, and countries are deterred from getting debt relief from official creditors, that means they're going to perpetuate debt overhang. And it's almost ironic because official creditors get repaid by the debtor country's ability to raise funding from private capital market. It is the private creditors that eventually help a country repay its official creditors. So it's even in the interest of the official sector to preserve the ability of countries to continue to access capital markets. But this is one of the big elephants in the room that needs to be tackled with in an effective manner.
Yeah, so let's dive more into this issue of debt. We have seen, obviously, the DSSI initiative from the G20, which is sort of temporary suspension. We did see the adoption of debt framework, though I think there's a lot of details still out there to be determined about how exactly that will be implemented. But so I want to maybe do a round robin and get a sense from you. And Patrick, maybe we'll start with you first. You know, as you're looking at this debt framework, what do you need for that to be an effective tool? How are you looking at your debt sustainability? What do other, countries that you're talking to need from institutions like the IMF, need from private creditors to sort of make this work?
Thank you, Adva. I think first, I completely agree with Reza that the concern, one of the principal concerns is the treatment of the private lenders. And for those countries, mainly emerging market countries that have been over the years created this ability to borrow from the capital markets, that is too high a cost to pay. If indeed we have to abandon that, meaning abandon going to the capital markets, either because of concerns about being in default, or for that matter, because through, let's say, programs that from the World Bank or the IMF, the IFIs, require some sort of non-concessional borrowing sort of clause and requirements, etc. So that is a big issue, and frankly, everybody understands it. The only problem is it's taking time to get to the bottom of it, meaning to get a resolution. And that's what Teresa, I think, called an elephant in the room. Now, the point is, if time is of the essence, and this is the time, it's now that we need to provide fiscal space from debt relief, etc. But waiting for 2 years doesn't help. So I think the point here is that conversation needs to take place quickly. On the other hand, it is true that the lowest income country, or the countries, say, much lower in terms of incomes, they have probably obtained debt relief through a variety of other measures, including debt relief directly on their lending, on their borrowing from the IMF and the World Bank. So I think in some sense, the biggest issue here relates to middle-income countries, or the countries that are at that level. So in some sense, this is you want to call it the cusp of despair, for countries. That's at least my terminology. And we do hope that that can be resolved. Having said that, I think the bigger issue is to realize that our needs are not only, say, over the next 6 months. We have to work on a sort of a proper fiscal framework that anchors the entire process, say, into the medium term. And that, to me, is much more fundamental. And it will require funding from a variety of sources, including, of course, the capital markets. So I think it is that sort of, should I say, appreciation of the difficulties. And it is true, the IFIs have been quite good in appreciating some of the difficulties in some of the countries. But in this one, there seems to be a certain stickiness in appreciation of what needs to be done.
Will Kenya seek some sort of debt relief or restructuring? Is that going to be necessary?
That is something that we are considering along with all the other options. We made it clear that we will decide and move in the country's best interest. And that means exploring all available options. And DSSI is one, but there are also others, it's a package really, which has to be anchored in this medium-term fiscal framework.
Right. And Rachel, coming back to you on this issue of debt, what do you see as the role of the UK as a donor and as a member of bodies like the G20, where a lot of these conversations are are playing out. What do you see your role there, and how can you help sort of push the conversation forward? How are you seeing things play out with some of the countries that you're working with?
Great, thanks. I think this is really important, and I think we've got, there's been a number of different views expressed already on this panel, so this is an area where we can get into a good discussion, I hope. Look, I think we've seen debt as an important issue. I think there's two kinds of issues we've got here. We've got countries who are facing a short-term problem where you need some, ideally some suspension of current debt payments will help them through the short term. And then we also have countries who, frankly, even before the pandemic, were in unsustainable debts, and you need some restructuring. And I think it's important when we think, I was interested to hear my colleagues talking about the role of the private sector, and there has been, nervousness of countries to go for some of these debt options because of the concern of being frozen out of the markets. But I guess I would say two things. One is on that. One is, debt restructuring is a classic prisoner's dilemma problem, right? We will all, in a country that is in, is in debt overhang, has the level of debt that it's impeding growth, all debtors would benefit from a reduction in debt and an ability to repay, sort of well understood dynamics of debt restructuring. That means we cannot have a situation where big lenders, the private sector, as it seemed to be being suggested, can be excluded from that because they are a classic element of the prisoner's dilemma, and so they have to be part of the restructuring solution. And donors are not going to do restructuring if the private sector or other donors are not part of it, right? That is the point of the common framework. That is why we are trying to get everyone to agree what the common framework is. The other thing I would say is the evidence base is that actually countries manage to return to the markets really quite quickly after they have had a restructuring. So I would argue that maybe people are being a bit nervous, a bit too cautious, because I think, if you look back to past restructurings, it's not shut countries out for many years at a time. The other thing is, we do have to, we're a bunch of economists, we do have to think about incentives. And there are a lot of examples of private sector deals that did not make any sense. And if you, always protect and donors bail out, it's just not going to set the right incentives. So I do think that it's important to do restructuring. I think we need a common framework for doing that. We can talk about the multilaterals, but I do think there's they are able to lend at a low rate because they have a preferred creditor status. If you then, the private sector pays a high, charges a high rate, and then you say, well, they ought to be preferred, well, that's just going to change, the costs going forward in a way.
I know Reza wants to jump in, and then Patrick, I saw your hand go up too. So let's, and then we'll come to Ricardo. So let's do a little rapid round of response. Reza, go ahead.
Thank you, Adva. So I think, what Rachel is saying illustrates very well the challenges that confront us. I speak now from the perspective of international financial architecture. It actually reminds me of all the discussions that used to take place in the Paris Club for a few years at the IMF. I used to head the IMF delegation to the Paris Club. And this was the favorite topic of all creditors, which is the principle of comparability of treatment. And nothing gets the juices flowing more around the table of creditors than to talk about comparability of treatment. And these are all discussions that have happened. I'll just say one thing. At the end of the day, the decision, and especially in the way it's being talked about, is with the debtor country to come forward and accept the terms and especially the comparability of treatment. What will likely end up happening is that when it is unattractive in this manner, as Patrick also mentioned and Ricardo also mentioned, a number of countries will delay the decision. And for those countries which are in high debt, that means they will continue in debt overhang. And debt overhang has been well established to suppress rates of growth. And coming on the back of such a big global shock, which means more people having been pushed into extreme poverty, it is going to prolong the period that developing countries and middle-income countries take to come out of this purely external shock. If there was one shock, which we can all agree is external and exogenous and not due to own decisions, it is a pandemic, a global pandemic. And that is how I see these things playing out. And it's a bit of deja vu because back in the IMF, I used to work on debt issues and helped write one paper in 2013 that got known as the too little, too late paper. And it essentially argued that the history of debt restructuring shows that they come too little and they are too late.
Great. Patrick, let's go to you.
Thank you. I agree with Reza's approach and what he has highlighted, but I want to underscore the following. Time is of the essence. And in some sense, Reza, thanks for your too little, too late paper, but this is a time when we cannot afford to have too little, too late. We've never been hit by such shock. I mean, so this is of, huge proportions. So it is important for us to deal with it. Now, it's true, the comparability of treatment, pari passu, etc., that is something that obviously is good. And I could actually say that that is the perfect, right? But at one point, we sort of have to grab the good as opposed to going for the perfect. The perfect will probably take a long time. And frankly, donor countries in the past have also had to deal with that sort of the middle, let's say the sort of middle of the road position, instead of taking the extreme positions as maybe one would see in the prisoner's dilemma. So I don't think the issue for me is to emphasize where the outcome will be, but rather an appreciation of the conjunction. And we can get stuck with our sort of principles, and at the end of the day, there won't be much of a country. I spent the first month, and this goes back to you, Adva. You asked what we were doing. The first month, March, actually April as well, I spent a lot of that time working on things that were not in our mandate. And this is because of the impact on human beings that this crisis had actually caused, or the potential of causing it, right? Talking about PPEs, which we couldn't import from various places, ventilators, et cetera, et cetera. Now we are talking about SDGs. I mean, health issues, education issues. I mean, we've set ourselves back more than 10 years on the SDGs. And so in a sense, we can continue talking about the principles and, what would be perfect. And, but my point is there won't be much of economies if we cannot deal with these things quickly as part of a package that actually anchors the fiscal development of a country going forward.
Yeah. Well, I think this is sort of a perfect opportunity, and Ricardo, I'll come to you on this issue of debt, but I think it's a perfect opportunity to really talk a little bit more about the policy side and what types of fiscal policies can help in this recovery. And, we've had some good questions come in, so I appreciate those of you who are sending questions. We had some questions that actually had come in over Twitter from Nicolesh Castori and Matanchi, who asked sort of, what is the role of governments? What can they be doing? What's the best strategy or their top priorities as they look to sort of accelerate this economic recovery? And so Ricardo, maybe we'll go to you. What are some of those policies that you think, countries need to be implementing to guarantee that the recovery can continue apace, that we don't see that sort of significant equity shortages that you were mentioning?
Okay, so let me just say my 2 cents on the previous debate. I think that there's like 2 cases. One case is countries that are basically solvent, and the second case is what happens with countries that have debt overhang, right? So I think for countries that are basically solvent, we want to keep them with market access, and in those countries, I think multilateral lending is a complement, not a substitute of markets. And it would be much better if there was much more official financing available to them. I think the IMF has to make their lending policies more flexible. There's a set of limits to IMF lending that have to be lifted. The 145% in any calendar year, the 435% of quota before a program is deemed to be extraordinary access and so on. I think the annual limits and so on, those I think have to be increased. Countries should have more access to official lending. That will imply that they have to rely less on markets, and that's good for the cost of funding that they're going to accumulate. That will keep them more solvent. That's good. When a country has trouble accessing markets, I think there should be a mechanism like the one proposed by Rachel, where they can very quickly go and restructure their debts. And that means that they stop paying on what they owe, so they go into arrears. IMF lends into those arrears, and there is a mechanism to facilitate, haircuts, debt restructuring, and so on. In which, one of the elephants in the room is China, and the fact that it's one of the biggest, it's the biggest creditor in many of the countries in the developing world, and they're outside of the Paris Club. And the private sector, which they make their claims valid in the U.S. courts or in British courts, and there is a sense in which they do so, accepted by those governments. So the access to court resolution, I think, is something that has not been put on the table, but I think it would coax people into accepting deals. But I would fully agree that once the situation is debt overhang, you want to move as quickly as possible into that restructuring. You don't want to let it linger. And I think that efforts by Rachel in trying to make that system more effective, more efficient, much faster is going to be win-win-win. On what countries should do, I think I want to distinguish 2 periods, pre-vaccine and post-vaccine. I think pre-vaccine, we have to assume that we're going to see a couple of more peaks in this pandemic before we are done. So we have to think that we're not done with lockdowns, that there may be the need for further lockdowns and social distancing and so on. That's going to keep economic activity kind of like depressed. And I think in that case, it's a little bit managing a crisis, an emergency. It's kind of like survival money. We want to make more space for social transfers, more space to keep companies alive. And that's going to eat up a lot of the fiscal space that countries have, the ones that still have some fiscal space. But then post-vaccine, you really want a stimulus. And the question is, will countries have the space for that stimulus post-vaccine? That's maybe 12 months from now, optimistically speaking, in many countries, in terms of when they're going to get the vaccine and when they're going to get a significant fraction of their population vaccinated. So, but this is the right time to be planning for it. So I think that fiscal policy will have to be a bit out of whack for the next couple of years, 2021, 2022. And we need to plan for that. I see, for example, in the World Economic Outlook projections, the idea was that the recovery starts in 2021 and the fiscal starts to improve in 2021. I don't see that necessarily happening that way. I think there's going to be the need for much more official money to be put on the table. And I think that the kinds of spending programs for 2021 pre-vaccine may be different from the priority programs for 2022, say, post-vaccine. And finally, one thing. To anchor expectations, this is the last thing I'm going to say on fiscal. To anchor expectations that you're good for the money, good for the official money, and good for the market money, okay, you want to know that you have the tax base in the future to pay for that. And I think that there is a tax reform that is not exactly relevant for all countries, but it's relevant for many countries. We've gone through 3 decades or 4 decades in which we've been lowering taxes on capital income. And I think that we've gone a bit too far. In many of the countries I work on, taxes on capital income are way lower than taxes on labor income. And that's a little bit based on the idea that labor is less mobile than capital, so you want to tax the things that are less mobile. But the truth is that I think that has led to too high rates of labor income taxation that has created disincentives for formal labor, has increased the size of the informal sector. And I think that there's a limit to that. So my proposition is to go to an increase in capital taxation to avoid the fact that capital is mobile, to tax global income of your citizens, not just in local income, not just and to tax a global income. There has to be more cooperation on tax information. So countries should share tax information about what a citizen of one country owns in another country and so on. And that should allow them to raise incomes on capital, because you tell capital, if you stay here, I tax you. If you leave, I still tax you. So don't leave because I'll tax you anyway, right? So that will allow us to rebalance the tax structure away from so much taxation on labor, a little bit more taxation on capital. And that's the reform that will tell capital markets that we're good for the money. Thank you.
Great. Patrick, I want to come to you. The informal economy in Kenya was hit particularly hard early on in the pandemic. And you talked a little bit about some of the sort of digital rails that Kenya was trying to sort of stand up in this time. And we got a couple of questions from Anirudh Chakrav and Kanv Gupta, who were really asking about sort of the impact of the crisis on automation, on sort of digital transformation. And so I wanted to ask you, in Kenya, do you think we're going to see sort of increase of structural unemployment in this period? How is it impacting some of these broader trends around innovation and technological change? And what are some of the impacts on these informal economies in this moment? And what does that transition look like today in light of the crisis?
Thank you. Well, in terms of the informal sector, or should we say the SMEs more generally, this is obviously the backbone of the Kenyan economy in terms of employment, etc. And actually what we have been doing, and they were hit quite hard because they are very much in the services sector. But what has happened, particularly over the last few months, there has been sort of reaching out to the SMEs and appreciating that they do need financing, but more importantly, when the economy begins to strengthen, and it has begun to strengthen in various areas, pockets, etc. So for those that are now building back, they need financing, but they also need some sort of financing plus. So a lot of the in this case, financial institutions, banks, have built programs that will actually provide some technical assistance in terms of, for instance, accounts, et cetera, and reaching out, for instance, to suppliers, and also at the same time reaching out to the large companies. So having some sort of, let's say, a program that supports the entire chain of production, all the way from the small enterprises, small and medium enterprises, to the largest enterprises that they supply. So that is already ongoing. However, the big issue here is that our transformation in terms of the financial sector has not ended. And the key element here has to be that we need to move or to continue moving to a point where you can actually have financing anytime, anywhere. That really is the, let's say that's the golden standard that we want. That's a gold standard that we want to have the, for supporting or financing of the SMEs. Secondly, there has been additional support through credit guarantees. And actually just yesterday, the government launched a credit guarantee scheme for SMEs through banks, etc. That is something that is important. Going forward, though, it shouldn't be just financing. I want to insist on that. And I think the point here is we expect that there'll be a sort of a strengthening of the digitalization, as it were, not only in the context of financing, but across the ecosystem of digital finance.
Great, thanks. We're very close to being out of time, but I want to get to Reza and Rachel again quickly before we run out of time, but just, you know, we're short on time, so try to keep your answers short. Reza, I wanted to come to you because one of the things when we were speaking earlier that was quite interesting is you talked about how you've had to sort of re-examine the role of a central bank in this time of crisis. And so I wanted to ask you about that and how you look at, you know, the incentives, some of the incentives you've been providing for the financial sector to keep jobs going and how that changes as we look ahead. What is your role? What is your role versus other, you know, branches of the government as this recovery continues?
Thank you, Adva. I'm glad you raised this question because to me, I think one of the most interesting intellectual topics of discussion that will continue for some time after this crisis is what have we learned about the role of central banks, particularly the role of central banks in emerging markets. And I want to share with you a little bit of some of the discussions that we are having internally at the State Bank. I think the first point I'd like to mention is that this crisis, a crisis like no other.
We've got like 2 minutes left, so if you can keep it quick.
I'll keep it in 2 minutes. First, it's, in my view, blurred the lines between monetary and fiscal authorities. And in Pakistan's case, because there was limited fiscal space, we also did not want the government to undo the good reforms it had done, such as not borrowing from the central bank, not going on a spending spree. The central bank had to come in with quick and aggressive action to support the economy. So I think the first area that we discuss more is the blurring of the lines between fiscal and monetary authorities. The second area is, things like mandate and tools of central banks. And for us, I think a very clear lesson is that it is not a good idea to have very narrow mandate. For instance, if we were a pure inflation targeter, the Central Bank of Pakistan would not have been able to give the kind of stimulus that it did to prevent bankruptcies and to support jobs and to support public health and also to support investment. So I think the mandate of central banks, this crisis has shown, needs to be broader than just inflation targeting. It has to include the ability to respond in a crisis and then the tools. Reducing interest rates is one thing, but if we did not have some of the other tools, including through our refinance facilities, where we lend to banks and banks on lend while they take the credit risk on their balance sheet. If we did not have these tools to directly inject liquidity into the financial system, we would not have been able to give as aggressive and as quick a response and put in as much liquidity in the system as we were able to. So I think mandate and tools are two key areas where there will need to be more discussion about the appropriate role of a central bank in fighting crises.
Great. And Rachel, I want to come to you as we close here. We've heard a lot, Patrick mentioned sort of the backsliding on SDGs. Reza talked about sort of the poverty rates, and sort of as we look ahead, there are a lot of development challenges, a lot of funding challenges that countries are going to face in social spending. And so I wanted to ask if, one of FCDO's focuses is going to be on addressing sort of those expanding poverty rates, and how you look at the various tools in the broader toolkit. You mentioned trade earlier as sort of part of the broader development finance discussion.
Yes, thanks. I mean, there's a lot there. I think for me, one of the real dangers of the pandemic is these long-term impact on human capital, which will reduce productivity of this generation potentially, unless we do something about it, for the rest of their lives. And we've seen good evidence that that kind of short-term impact's going to have that long-term reduction in productivity. So, but as you say, as everyone said, fiscal constraints are really tough at the moment. So I think the key message for us is prioritization and looking at the evidence of where, again and again and again, of sort of where is a pound going to be most spent of our own, but also helping countries make those decisions themselves, because of course countries and individuals, poor people, spend more on poverty reduction than donors do. So part of our role is that. I think it's also, in terms of tools, trade is part of it. And I actually think we've been relatively successful, given the huge shock, in maintaining trade and supply chains throughout a very different, when a lot of it else closed down. One surprise for me is how resilient some of the supply chains have been. But obviously, we need to look at that. And the third thing is working with partners. I think what this pandemic has really shown us is that we are so much more effective when we work together on tackling these issues. We're all being faced by the same threat, and we are all suffering differently. It's true. Some, like the UK, had much more fiscal space than others. But there's a lot that we can do more effectively if we work together, whether that be trade, whether that be working through the multilateral institutions to provide support, whether that be doing a common framework on debt, where I just want to say I think we actually agree much more than we disagree on that. So I think for me, the big takeaway in moving forward is that we have to work together and build, work through effective multilateral institutions to deliver, whether that be G20 or World Bank or IMF. We've got to use those tools because that's where we deliver biggest impact.
Great. Well, I want to thank you all for a really wonderful conversation. Clearly, we could have continued this, and I'm already over time. But so thank you all, and thank you everyone for joining us. I now want to hand things over to Jayla Pasar-Basoglu, who's the Director of IMF's Strategy, Policy, and Review Department.
Thank you, Adva. Greetings to all of you, and thank you for participating in this important event. Since joining the IMF in 1992, I worked on many crises: the Iran crisis, Nordic crisis, Asian crisis, global financial crisis, and so on. But as was just said during this panel, and our managing director has also said, this is a crisis like no other. It's more complex, with interlinked shocks to our health and economies. It's more uncertain. It's truly global in nature, and the economic outlook impact has been dire. There has been an unprecedented policy response. At the time of our annual meetings in October, governments had provided around $12 trillion in fiscal support and other support to households and firms. Major central banks helped prevent a credit crunch through interest rate cuts and other extraordinary measures amounting to about another $7.5 trillion. But the response has been uneven. While advanced economies did whatever it takes and injected on average some 20% of GDP in different measures, emerging market economies were able to provide 6% of GDP, and low-income countries did whatever they can with 2% of GDP support to their households and firms. So this uneven response is likely to result in an uneven recovery, and no recovery will be durable until the public health crisis is addressed. In advanced economies, vaccine deliveries has begun, but the pandemic needs to be stopped everywhere so that we ensure that vaccines and effective treatments reach everyone, including, of course, less developed countries. We must also provide further financial support to the poorest economies where the pandemic will continue to weigh heavily. The challenge has been to provide such support without adding to existing debt vulnerabilities. This is why we supported the G20's debt service suspension initiative, which gave many of the poorest countries temporary breathing space in their fight against the virus. And as was just discussed with this great panel just now, we need to go further, as there are countries that need more than suspension of payments. And of course, there are countries where they will be able to access markets, continue to access markets, and return to normal, sustainable path. But for those countries that have not sustainable debt situation, we cannot afford to be too little too late. The stakes are too high given the potential scars from this crisis. And I want to stress that the G20 Common Framework that was approved in November is critical in this context. And if it's fully implemented, it will allow most vulnerable countries to be able to apply for permanent debt relief while making sure that creditors negotiate on the same level playing field. This is very critical also for us as the fund to provide the much needed concessional financing to our member countries. Since the outbreak of the pandemic, we at the fund responded very quickly. We reformed fund's toolkit to respond to the conditions created by the pandemic. We provided debt service relief to our poorest member countries via the Catastrophe Containment and Relief Trust. 29 countries have been approved for relief of their debt service. Finally, since mid-March, the fund has approved financing requests from 83 countries committing funding of some $102 billion. And the low-income countries that have received substantial support, more than 2/3, received financial assistance through our emergency facilities and those that are eligible for concessional financing at zero interest rates. So looking ahead, we expect to provide further financing through multi-year IMF-supported programs. About 18 countries are currently in discussions with us on new arrangements. So this conference has been planned in large part to hear from our colleagues in developing countries. We, of course, stand ready to support you. And to prepare for the conference, we requested video testimonials from civil society organizations about the progress of the crisis in their countries. I'd like to thank them, and we would like to show you a video with their words. Thank you.
Morocco is among the countries that continue to report thousands of new COVID-19 cases daily. In the third quarter of 2020, Morocco recorded a growth in the unemployment rate to 12.7%, a record for the country since 2001.
According to official sources, it is estimated that university dropouts might reach 35% by the end of the year, and for their part, approximately 300,000 children drop out from school.
The measures that match and support and augment local efforts of the women and workers have positive and robust impact. The efforts that are top-down and not in coordination with what the citizens are doing to deal with the pandemic are still struggling.
The measures for the private sector included the program launched by the government called Reactivate Peru, which is a $17 billion fund that serves as a guarantee for working capital loans, which is the largest guarantee fund in the country's history. Also, the government granted a subsidy to cover up to 35% of the salaries of certain employees in the private sector.
Besides the strict public safety measures, Morocco created a special fund to mitigate the impact of the COVID-19 crisis. The fund aimed to support vulnerable businesses and households affected by the pandemic. The fund helped many businesses avoid bankruptcy and preserves jobs.
We have vegetable growers, small farmers on one hand. It was the peak harvesting season and the vegetables were ready to be brought to the market. The transportation closed down, the markets closed down. On the other hand, we had vegetable vendors, women as vegetable vendors in the city, and the markets again closed down, transportation closed. How do they survive? How do we stabilize their livelihoods? Seva connected the women small farmers, the vegetable growers, and the women vegetable vendors in the city, and we set up a whole enterprise. Now today has connected 1,500 small farmers and 4,500 vegetable vendors. These vendors now use electric rickshaws. They no longer have to sit on the ground in the midst of traffic and pollution, seen as encroachers, but now use the e-rickshaws for home delivery.
At Flagship, we hosted the COVID-19 Founder Mastermind Series, an interactive strategic virtual series where we bring together our entrepreneur community to share ideas and learnings as we adapt to this new normal. We also offered some of our signature tools and methods for SMEs to adapt and thrive during these trying times.
Although the situation is still complicated, the economic recovery is already underway, faster than in other countries in the region, despite having suffered a much greater setback. This is due to the strong fiscal support and the fact that the Peruvian sol remains the strongest currency in the region. Moreover, half of the lost jobs have already been recovered by now, but there is still a long way to go.
Welcome. My name is Eleni Jokos. I'm a correspondent at CNN. It's my pleasure to be chairing this panel discussion titled Healing the Scars. And as we come to a close of a very tumultuous year, I'd like to reflect back over the same period in 2019. Interestingly, I had traveled specifically to Senegal to meet with the IMF MD. And it was in Dakar, and the plans and the scenarios that we had discussed over that time was one that would kick off 2020 and a new decade with a lot of excitement and commitment to sustainable development goals, and importantly, focusing on equitable growth around the continent and specifically in emerging markets and developing economies as well. And don't forget that it's a momentum that there was a vision to continue this that had been carrying on for around 2 decades. And that growth we had seen put a significant dent in priority areas like poverty reduction as well as life expectancy. But the pandemic has not only derailed those plans, but also accentuated the existing vulnerabilities, and it's reversed some of the gains that we've made, resulting in heartbreaking inequalities that have been on the rise, specifically in developed economies and developing economies as well. It's also reopened economic and social wounds, scars that were susceptible to shocks. And here we are today. We're looking forward to 2021. And it comes with a bit of hope. Vaccines are on the cusp of global distribution. It's a potential turning point. So will developing economies and countries reach that turning point as well? What are the policies that can prevent the gap from widening and getting developing economies back on the path to equitable growth? I'd like to welcome our very special guest today, and I'm in incredible company. I'm very honored to welcome the MD of the International Monetary Fund, Kristalina Georgieva, Nyaranzai Gumbo Njanda, Chair of ActionAid International, human rights lawyer and CEO of Rosario Memorial Trust, Honorable Amadou Hott, the Minister of Economy for Senegal, and Nobel Prize-winning economist Michael Kremer from the University of Chicago. A welcome to all of you. I wish I could see you in person, MD. I'm glad that I got to meet with you this time last year. And what a change and difference it's been. I mean, reflecting back on the conversation that we had back then to where we are today, we're talking now about scars, and we're talking about healing those scars. What would you say the biggest wounds are of the pandemic for low-income and developing economies?
It is indeed a very different time that we meet virtually, and it is so critically important to zero on the issues for the developing world. Why? Because what we see from this pandemic is a very clear danger of reversing some of the trends that we cheered when you and I met. We are seeing the dramatic impact on growth prospects in the developing world stemming from this pandemic. In fact, the health tragedy, as terrible as it is, may be even overtaken by the economic scars from the pandemic. And we see reversal in poverty, hunger, something that is absolutely unacceptable. So let me focus on 3 things. One, the criticality of returning to growth. Africa, this year, 2020, will finish with 3% smaller economy. It will shrink. And this is bad. Even worse, in my view, is that next year we are projecting the world economy to grow 5.2%, Africa only slightly over 3%. Africa has to grow 6, 7, 8, 9, as Senegal has been doing over the last decades. By the way, Senegal is a wonderful exception because this 2020, it will finish with positive growth, one of the very few countries globally to do so. And that takes me to my second point. We have to recognize that those that are withstanding this shock better do so because they built strong fundamentals before. The same way people with weak immune systems are hit by the pandemic more severely, economies with underlying vulnerabilities suffer more from the economic crisis. And that means we need to build these fundamentals. Three, it is absolutely paramount to recognize the importance of supporting developing countries much more strongly in the year to come. Why? And I'll give you numbers, and they're pretty shocking. What we saw is that advanced economies in this crisis adopted the famous Mario Draghi, whatever it takes. They put 20% to their GDP in policy actions to support their economies. Emerging markets, 6%. Low-income countries, 2%. But behind these percentages, if you take the absolute numbers, breaks my heart. Absolute numbers in advanced economies, $9.8 trillion, almost $10 trillion. Absolute numbers in low-income countries, $40 billion. This is 245 times less. Now, we have done, at the IMF, we have leaned forward. Actually, out of this 40 billion, a big chunk comes from emergency financing from the IMF. And what I want to call on everybody is that we have to be determined. There is urgency to support low-income countries so we prevent the scars from being deep and possibly leading to irreversible shift in trends. And as we do so, one particular issue we have to put to our hearts, and it is investing in people, investing in health, investing in education, investing in social protection. And I give you my word that the IMF will be prioritizing the resilience of people on equal footing as resilience of the financial system and the economy as such. I'm sorry to dwell on that, but I'm thinking of all the kids that are now out of school. If you are in an advanced economy, my granddaughter, she goes to virtual school every single day. If you are in an African country and there is no access to the internet, and more than 50% are in this situation, the kid is out of school, scarring for forever, year lost. And we know that next year, when kids start coming back, boys are more likely to go back to school than girls. So gender equality can get a dent. And this is why I speak from the bottom of my heart. We have urgency to act to zero on the needs of the developing world.
Thank you so much, MD. And I completely concur with you. I think that the vulnerabilities that exist between emerging economies, low-income countries, and advanced economies are specifically highlighted and perhaps manifested in the way that the children have been impacted. And Yaranzai, I'm going to jump to you on this because the MD ended on this point, and I think it's so vital. Looking at kids out of school, looking at the impact on women and children, this pandemic has reversed so many gains. And I know that this is a topic that's very close to your heart as a human rights lawyer, as someone that, is even advising the IMF on some of the things you're seeing on the ground. Tell me about the situation right now when it comes to the vulnerable communities, because these are actually at the heart of what we should be focusing on, as the MD says.
Thank you so much. It was heartwarming to hear the MD Kristalina talk about resilience of people, and it's about people, it's about systems, it's about the economy. When we talk of healing the scars, for me and the work I do in the villages, in the communities across the continent, the scars are losing lives, really bearing people to COVID. It's the risk of the high numbers of morbidity around the world. It's a real life situation of losing lives and people who are not able to get access to treatment. It's about how ordinary women mostly have struggled with the impact of COVID-19. So the critical issue for me on the crisis at hand has been how COVID-19 has impacted women as workers, that when COVID hit and we went into a recession, women were already in fragile jobs. And the frontline workers are the majority are women. It means they are also at high risk, even when we look at the health workforce. The second critical category that has been hit so much as women is women as producers and market women. We know that we as women in the villages, the women farmers were not able to take their crops to the market, and the markets were frozen. So the whole issue of livelihoods became a critical issue. Women as caregivers, the healthcare systems are fractured. And when we heard about self-isolation at home, it reminded us of the HIV pandemic, which was about home-based care. It means the public health sector was transferring responsibility to the household and to the woman as the caregiver. And in addition to all that is the crisis of the adolescent girls. Definitely the data is telling. GPE has given us the data of the 24 million who may not be able to access education, and teenage pregnancy, child marriage, data I have every day as AU Goodwill Ambassador on ending child marriage. The crisis demands us to re-recognize that the greatest existing precondition that is making the situation work is gender inequalities. And UN Women has said, this COVID-19 is taking us back 25 years of the gains that we've made. And we had the Central Bank Governor of Kenya talk of the SDG. So this is a huge loss. It demands courage. It demands us to look into opportunities that exist, but definitely women are not on the table of the COVID response. Women are not on the table of the economic recovery. Women are not on the table at all levels. So it's great to also see that we need to continue to build that critical mass. The scars are painful. In this ActionAid, we are just bearing our own Soren, who has been so much involved in this response. And today, it's yet a reminder that healing the scars is about people, systems, and the economy.
Thank you very much. Honorable Minister Hart, great to speak to you again, great to engage with you again. So you've heard from the MD saying building resilient economies is vital. MD, I know that South Africa, where I'm right now, we did not take that advice, but this is why we're in trouble. Senegal, however, has been on a growth path, and you've been very firmly focused on building sustainable and equitable growth. I want to talk about how you have taken into consideration some of the vital points that Nyan Zayed spoke about, that keeping people in the heart of what you do, of the agenda of how you spend. And it's so hard because you've got to reconcile the numbers, the budgets, the lack of funding, the lack of money, a slowdown in economic growth, with the realities of how people are experiencing and kind of experiencing the harshities and the negativities of the pandemic. How do you do this? How have you done this?
Thank you, Eleni. It's good to see you again. Kristalina, good to see you as well virtually. Abdullahi of Finance and Budget sends his regards as well. First of all, I'd like to thank the IMF for convening this important panel this afternoon here in Senegal. And I wanted to also say that early in March, when the pandemic started, we took very quick measures under the leadership of President Macky Sall to put in place a social and economic resilience program to help the health system, to help the most vulnerable people here in the country, but also in our diaspora, to help our companies, to help all the sectors that were in trouble. And the program constituted about 7% of our GDP, about 1 trillion Senegalese CFA. And one of the second pillar of this program is the support of low-income households, to make sure that about 1.1 million households are receiving food help, but also the government is helping them pay their electricity bills, helping them pay also water bills, but also send money to Senegalese overseas, because we receive about 12% of our GDP coming from our diaspora, and many of them also were stuck outside of Senegal, so we had to send them money. So we constituted a fund that we call a Force COVID-19, and we spoke to our partners. All the donors contributed, and I want to pause here and especially thank the IMF for the swift reaction and the massive reaction, because all the funds we received from our partners, the IMF contribution was at least 1/3, and it came within 2 weeks of the country finalizing the program, and it was really right there, and it was so fast that I said maybe all the donors in doing projects or programs, we should replicate that fast track way of dispersing really help when it is needed. And the government also took the decision to freeze many actually expenses, like missions, because nobody was traveling anymore, staff training, conferences, seminars. So our sort of recurrent expenditure, we cut it down, number one. Number two, we said that investment projects that were not a priority, we should postpone them, let's say, to coming years, and use that budget allocation to face this actually pandemic. So we had to increase our budget. We had to double our budget deficit. We were planning to be at -3%. We ended up being at -6.1% to finance the fact that we have more expenses, the fact that also our domestic resource also has come down because of the economic impact of this pandemic. So this is really what we're trying to do. And then we passed a new bill, a supplementary bill on the budget, so that we are allowed to spend all that money. And we are glad that after that intervention, about 97–95% of the population that we consulted, the people that were helped, most of them, 97%, were happy with the government's intervention. And thanks to our efforts, but the efforts of our partners as well, including the IMF.
Minister, very quickly, just on the fact that debt repayments have been halted until the first half of 2021. How important was that in creating sustainability, sustainable, start to the year?
It was important, but for Senegal, we didn't get it until later in the year. Actually, around September, I think, is when we, maybe August, when we signed with some of our partners, bilateral partners. But some actually we didn't sign because of some issues on the MOU. On the budget side, the impact was not very big because the interest part was not very big. But it was good that we got cheap funding, actually, even if it started late. That's why we are very happy that the initiative is extended until June of next year. But we are pushing very hard, and with the help of Kristalina and all the G20 members, hopefully will extend it. It will be extended until end of the year. So for 2021, it's important for Senegal, and it's very important for many countries in Africa as well. And for now, it's more for low-income countries, but we've been pushing also for vulnerable middle-income countries to be able also to have this benefit, and hopefully that will be accepted, such as the likes of Kenya or like of Seychelles, or maybe others, Mauritius, that have been impacted, but who are not low-income countries, can maybe have some benefit from this initiative.
Mr. Kramer, I'd like to bring you in here, and I know that you've been looking at various scenarios that could play out in the next year and looking forward, but I want you to reflect back on this year. We have been unified by fighting the same problem globally, and that is a pandemic. But globally, we've seen different responses. We've seen COVID-19 rates playing out differently. Like for instance, here in South Africa, you have very high infection rates, but low death rates. But you've seen economic responses vary so significantly. What have you learned from leadership by way of the economic reactions and where we are today, and how that sets the tone for where we're going?
I think you're right. The countries have responded in different ways to this. And that's partly because the epidemic has played out in different places, but it's also because of different policy responses. And I think one thing we've learned is that we need to try to have a smart policy response. And that means taking the actions that are going to be most effective against the epidemic with the least negative consequences for the economy, but also, very importantly, as the managing director said, for investments in people. And really one of the tragedies of the pandemic has been the impacts on access to other routine healthcare, women no longer delivering babies in clinics, children not getting immunizations, kids coming out of school. So I think we're learning over time, and most countries are now, for example, allowing kids back in school, but not all countries are doing that. I'm not an epidemiologist. I don't want to, this is a decision for every country, but we may be able to take steps to try to ensure that the most essential services, educational and health services, can be restored, and so that we're not adopting counterproductive measures like stopping trucks on the road that are carrying food between the countryside and the city that create huge suffering for people and that are not really essential to the epidemic. Instead, we can focus on things like masks, banning, not having large gatherings indoors, things like that. Okay, but I think the other thing that I would really stress is one thing that's critically important, and I think will eventually get us out of this crisis, is vaccines. And the world has made substantial investments in vaccines, which is great. We were lucky in that it looks like a wide variety of vaccines are proving effective, more effective than we ever anticipated. Now, the plans that were made at a global level through COVAX, for example, were targeting perhaps 20% vaccination rates in high-income countries that bought vaccines for their entire population. For low-income countries, COVAX, they were targeting 20%. They don't even have the financing for that. We're lucky enough that we will have the capacity that we can go beyond that. If you got 20%, you can get the people who are at most medical risk. But we're in a position now where we can go beyond that, because if we want to get economic recovery, if we want to get recovery of social sectors like education, ordinary healthcare, we'll need to go substantially beyond that 20%. And that's now no longer an unachievable goal. So we have perhaps 10 billion doses online of capacity. That's enough for 5 billion people. That's assuming everything goes right, the remaining vaccines get approved. But we can actually, if we can accelerate this by putting in more capacity, we can actually speed the economic recovery. The IMF estimates are each month that goes by, $500 billion is lost. So it's worth, even if you're spending $1 billion to put in more capacity, that's worth, happy to share calculations for those who are interested. The other thing is we need to make sure we use the capacity we have. And that means since different vaccines are suited to different circumstances, some require extreme cold chains, some don't, since the prices are very different, we could set up exchange systems so that each country can make their own choices about what vaccines they want to prioritize and get access to them.
Thank you, sir. I would like to let the audience know that we are taking questions. We have a few that were sent prior to this conversation. I'll be getting to them in a short while. For those of you that still have a few questions to send us, you can go to menti.com and the code is 9106394. So please send those through. And MD, there's so much to talk about. So I'm going to try and whittle it down to the most important. I mean, Mr. Kramer was saying that vaccines are directly correlated to a resumption of economic growth and sustainable growth and the fact that we can get back to recovery. But that can only be done with the right amount of funding and thinking very carefully about how we do this with low-income countries. IMF is very committed in helping making that happen, but then you have the issue of a debt overhang, and that is really plaguing a lot of countries, and it's also dominating conversations.
I could not agree more with the panelists on what they have highlighted as priorities for action. And I want to get to your questions in the following order. First, to recognize that the best value for money today is to accelerate access to vaccines everywhere for everyone. If we want to see this crisis in the rearview mirror, that is absolutely paramount that we share resources and we move as fast as possible. To give you the aggregate number of what the IMF calculated, accelerated access to vaccines would mean it would provide a boost between 2020 and 2025 of $9 trillion. So we do it, and out of it, actually, emerging markets in developing countries would take about 40% of the benefit, and 60% would go to advanced economies. So if there has ever been a case of be generous, help everybody, this is the case. I admire the work that has been done with COVAX. The World Bank has made a $12 billion commitment. We will have to do more, and then we need to think about distribution and health systems. And I just want to say it is a unique opportunity as we concentrate on the vaccines to think more broadly about health systems and this human capital we are so concerned about. But then too, we need to recognize that we have this a narrow issue of vaccination, but we have the broader issue of getting emerging markets, developing economies on a faster growth path. And there you put the question of debt. I want to zero on it and then make one step further to access to financing. So on debt, David Malpass and I early in this crisis called for debt service suspension. It is so commonsensical that if the economy is in standstill, debt service should be in standstill. You can't extract money when the economy is not working. And if you do so, it would be at the cost of people dying. And I was so encouraged to see the G20 embracing this. We got the debt service suspension in place. And I agree with Minister Hoth that the crisis is not going to be over by June. So we have to be thinking about extending it for a bit longer. By the way, at the IMF, we took an early decision that for our poorest members, we should stop service of their debt to us. And actually, we went one step further. We got our better off countries to help us to de facto cancel this debt. So we have a grant mechanism for repayment. We have extended this until mid next year. And I can tell you already it's going to be extended until the end of 21. This is already saving these 29 poorest countries 500 million. This is $500 million of easing in space. Now, when we look into the future, we will have to recognize that for some countries, this suspension of service is going to be enough. They'll come back to growth, and they would be able to restart repayment. For countries where that is not sustainable, and unfortunately there is quite a number of these countries, this is not going to be enough. You kick the can down the road, but the can is so heavy that if you continue kicking, you'll break your foot. So we have to recognize the need of case-by-case debt restructuring that may also include debt reduction. As the minister said, while we are concentrated, because we have the common framework for the countries, for the low-income countries on debt, we are concentrating on this category of countries. There are some emerging markets that are in a similarly difficult situation. In other words, low middle-income countries in that distress. We have seen restructuring for Argentina and Ecuador, and I would be the first to urge us to act early. It is not going to get better, it can only get worse. The earlier we front this issue, the better countries would be. And you will see the fund engaging very actively on a case-by-case basis to make sure that we bring that to sustainable level. But this is not going to be enough, and I would finish with one sentence here. We have to think about access to financing on a scale that is proportionate to the needs of countries to overcome this crisis. At the IMF, we are already working on a next generation of support to countries. The first generation emergency financing, we asked only for two things. We asked first for support to be provided to the most vulnerable people, most vulnerable parts of the economy, prioritize doctors and nurses. And two, we asked, keep the receipts. So spend, keep the receipts. By the way, today is International Anti-Corruption Day.
Oh,
keep
fantastic.
the receipts. It's a very important message.
Yeah, I mean, to be honest,
for the next generation, we are going to look at fiscal policies, governance, and growth injecting policies.
You know what, when the IMF says we're asking for just a few things, I think all policymakers are like, okay, what do we need to do? And I have to just reiterate what Pakistan's Reserve Bank governor earlier said during this event. And he said, you know, when the IMF gives you a program, it actually comes with a lot of pain. And here I'm trying to reconcile the fact that the world, and you even mentioned, you know, developed economies, advanced economies are spending 20% of their GDP on spending their way out of this crisis, and low-income countries are spending a mere 2% of GDP. And then we're saying to low-income countries, you actually have to worry about your debt overhang. We've got to think about debt relief and debt restructuring, and you have to be even more prudent than most. MD, how do we reconcile this conversation? Because it's tough, and we have to have this conversation because policymakers are basically feeling very stuck.
So let me first say that as the first managing director from an emerging markets, when I talk about pain and gain, I am not reading it from a book. It is from experience. My own country, Bulgaria, in the mid-90s, went virtually bankrupt, hyperinflation, very painful period, and then worked with the IMF through these issues to build sound macroeconomic foundation. And today, Bulgaria is one of the most fiscally prudent countries in the European Union. It is kind of pain that you remember, you don't want it to be repeated ever. So my message to countries is, yes, working with us means concentrating on painful problems to be solved. We learned from experience that as we solve these problems, we do have to pay attention to the most vulnerable people. And this is why we put what we call social spending floor in our programs. We don't want to fall below. But we also recognize that strong macroeconomic fundamentals are paramount for success, to have vibrant economy and to have private sector participating. And we will continue to work with our membership or countries that are experiencing policy difficulties. We ought to overcome these difficulties. Where we are, I think we have been working with Pakistan. I have been talking to the Prime Minister, and we have tried to be accommodative in a way. In this particular time, we structure policies, but ultimately what we want are healthy economies. with a resilience built across, and that I think you would see us in our next program interactions very much zeroing on a small number of critical issues. One, fiscal. Do countries have taxes that are being fairly distributed? The rich pay more, and that are actually collected. I mean, we can't have economies with tax to GDP below 10%. And I'm not going to name names, but we have those. We said it has to be at least 15% to GDP. If you want to have vibrant country, you have to do that. Then two, are we thinking about public investment that has long-term growth potential? Digitalization is going to be critical. Climate resilience, is agriculture resilient? And three, are we thinking about equality of opportunities, gender equality? Are we thinking about it? Is our thinking such that women are empowered to contribute to the economy? So it is. Let me put it this way: this is not your grandmother's or grandfather's IMF. We learned, and we are forward-leaning. We want to be an institution of choice for our membership, not of shame. that I know we still have work to do in that regard. We'll do it.
I get it. And I mean, as I said, there's still this correlation, IMF equals pain. But Minister Hott, you've just had a bit of experience in that. So I just... look, we've only got 20 minutes left and I have so many things to ask. So I'm going to jump straight into some of the audience questions, which is kind of what I also wanted to get into. And it's still on debt because I feel, and I really think, and perhaps you can tell me if, healing the scars of the pandemic, debt falls part of that. It's a scar that is going to be evident for all nations. And here's a question that came through. How long is Senegal able to sustain this recovery spending in terms of months? As on the other side of Senegal's debt servicing to private sector is some 45% of all debt servicing costs. So I know that you've been talking about whether the private sector, whether private creditors should also suspend repayments. But I also heard earlier today that if that is done, it kind of then puts into question, whether country can pay back debt, and then you get excluded from capital markets. So then that creates a problem. So what is the fine balance here that you have to play on the macro front?
Thank you very much. As the MD said, the critical thing is to mobilize more domestic resources. In Senegal, we have a short-term strategy to increase our fiscal pressure from around 17 to 20% by 2023. And by widening the tax base, instead of taxing more those people who are already paying their taxes. So this is number one. It comes to helping the informal sector also formalize more. And these measures are part of our recovery program through the PAP2A, which is the second priority action plan of the government. On the issue of debt, Senegal has always said that the issue of having a DSSI for the private sector for commercial debt, it should be on a case-by-case basis. It should not be like on the official sector. And Senegal certainly doesn't need that, actually. One of the risks is that if you're forcing that situation, that scenario, you may actually increase the cost of debt for some countries that don't need actually that private sector DSSI, and also to reduce the tenors that we can get when we go to the Eurobond market, for example. So it's going to be a case by case. Some countries certainly need that, and the common debt framework provides that when countries ask for that, you have some kind of same level treatment. That is understood, but again, it has to be on a case by case basis. And lastly, one of the best ways also to increase the domestic resource mobilization is to push more for private sector investments in the economy. Governments can invest, it's normal in big infrastructure and others, but you can also have PPP projects. That's why Senegal will pass the new PPP law, hopefully by end of this year. It's been just approved recently by a meeting. And so in that law, we are making things simple, transparent, and also taking into account the impact on the budget side as well, because the PPPs also can be very complex. We are setting up a special unit that will advise the government from the technical, financial structuring on the legal side as well, to make sure that the PPPs are balanced, that we don't take all the risk and the investor take all the returns. And we believe that moving more towards private sector investments is very, very critical going forward.
Thank you so much for that, Minister Nyaranzai. And again, I'd just say we are running out of time, so I want to get through as much as possible. We're talking about budget, we're talking about money, we're talking about debt. So that means squeezed budgets. How are you planning to mitigate the risk of tightening budgets, and what pressure is that putting on your efforts on the ground?
Thank you so much. I think for me...
Sorry, this is for Nyaranzai. Apologies, Minister.
Just building on the conversation from the Honorable Minister, I think for me, when we say budget are constrained, already it means there's a political choice and political decisions made, usually which cues out the social justice issues, which affects the communities and especially women more. So it's a question of political choice. With the little resources that are there, our governments must also continue to prioritize those issues. On the issues around tax, I think it's a wonderful opportunity. COVID-19 is a wonderful opportunity for tax reform. There's a lot of literature we can share around tax justice, the work that ActionAid has been doing. I think it's a fantastic opportunity that we have. I also liked the comment that the IMF we're looking at today and for tomorrow should not be our great-grandfather or great-grandmother IMF, which for me resonates with this is the opportunity not only to build back, because we don't want to build back on what was not working, but we want to build the future. And building that future should not take us back to the austerity measures that were hurting, especially the social sector, which impacts women and children more, the health and education sector. It should be building for the future that does not take us back to the structural adjustment experiences of cutting on payroll and all these issues, when actually this is where we need resources. But ultimately, the conversation on private sector should not be about big business. COVID has shown us that it's women who are producing liquid soap, sanitizers in the communities, who are also doing masks and who are innovating. So when we talk about investing in the private sector, I hope and believe that both our governments and the IMF are not looking at women's business as micro, but work that women do is also macro, as part of the mainstream, because there's nothing micro about women, market women in Africa who are actually sustaining households and families. So we need to be creative and find solutions where those market women become part of revitalizing our economy, in addition to building partnership with big business. Because otherwise we are going back to the past, where the thinking of what is business and private sector was actually mostly big men owning big shares in international corporations, and not the woman in the village who is protecting the environment, investing in climate justice work and agriculture. Thank you, Eleni.
I must say, it's a good thing we've got a Nobel Economic Laureate with us that can tell us if this is a viable economic solution to our problems. Mr. Kramer, are you able to weigh in here? I mean, look, it's not going to be the same. The world is not going to be the same. And I wonder if we are going to be operating differently and in the right way, and that vulnerable communities are going to have a stronger voice. And how do we empower them? Because that is one scar that exists. The inequalities have increased, they've been accentuated, and they are stark.
Yes, I think, when we've looked at the epidemic so far, we are seeing in many ways a K-shaped recovery. So if you look at I'll give some data from the United States, you look at people who are earning high incomes initially and people who are earning low incomes initially. In the short run, you saw big declines in employment. that in both groups. There was actually a very rapid recovery for those high earners initially. But the low earners, unemployment rates have recovered a little bit, but they're still very high. And I think that's something that we need to address as we pull out of the epidemic. Now, I do think, as I've emphasized, a key step is to get out of the epidemic, and one of the things that requires is distribution of vaccines. But I also think we need to think about what are the long-run changes that we'll see as a result of the epidemic. Here, I think I have a somewhat different take than some. We've made investments. Why did we get that recovery for high-income workers? Well, in part because we've restructured our work. Certainly, as a professor, I've restructured my work. I'm teaching online. I had to develop, probably not the best at it, but colleagues developed ways of teaching online. That requires restructuring how you teach. It requires technology investments. Those types of changes have taken place in sector after sector. Even this very conference that we're in now, this discussion is taking place online. That's happened for high-income people, but it hasn't happened as much for low-income people. And that's in part because the incentives of companies, there's plenty of incentive for Google and Facebook and so on to find ways of serving people who can pay for it. But I think...
So on that note, Mr. Kramer, we actually had a question from the audience that why isn't internet free? Why are we still discussing it at this point? And I think it speaks to what you're saying right now.
Well, I think that technology can also provide benefits throughout the income distribution, but we need investments to make that possible. I don't want to weigh in for sure on whether internet should be free, but let me give an example. Many people in low-income countries, they may not have smartphones that can use internet right now, but most people have phones. Well, they could be getting information on those phones, information that could be useful for agriculture. You can't go face-to-face to give agricultural extension advice right now, but you could give information on mobile phones, and that approach has been proven to be effective. You can't give classes online, and look, this is not a substitute in any way. This would just be around the margins. But there's evidence that if you do some outreach by phones, you can help avoid some of these educational losses that are happening right now. So I think we need to find ways, and those services could be free. The costs of this are actually extremely, extremely low. I would say that as we come out of this, many people are thinking that, well, we've had a huge reduction in international travel and ability to communicate around the world. And people think we're going to have a reduction in globalization as a result of this. I don't think that's what we're going to see at all. And here's maybe where I would depart from the conventional wisdom. We've invested in using technology to be able to communicate digitally. I don't see that in any way as a substitute for face-to-face interaction. I see that as a complement in the technical economic sense, just like coffee and sugar are complements, coffee and milk or tea and milk. Once you can start interacting face-to-face, then you can continue that interaction digitally or vice versa. So I think we're going to see actually an increase, because we can interact globally, because we can create broader networks now. This creates huge potential. We're going to see more globalization, more interaction. We just have to make sure that everybody can be a part of that.
Thank you. Minister Hart, this brings me to, when I hear what Mr. Kramer was talking about with regards to people working closely together, the continent is on the verge of one trading bloc, the Continental Free Trade Agreement, which is quite exciting because we've obviously derailed those plans. But listening to a more interconnected world, and technology has certainly kept us connected, it's kept us in the loop, and the continent has been leapfrogging older legacy technologies for quite some time now. How are you envisaging the next few years and how technology is going to play a role? I know that in your economic recovery plan, it does feature, and how are you thinking about an integrated Africa, a more integrated world?
Thank you. It will give us a lot of opportunities to trade with each other. We are already doing it, but the electronic commerce, the e-commerce has not developed yet that much amongst African countries, but we'll see probably some of that in the future. In Senegal, we've been working very fast to upgrade our ICT system. I think one of the best in West Africa, if not in Sub-Saharan Africa so far, with several programs that we are executing with the help of the World Bank and the African Development Bank. For example, to incentivize corporations, let's say, to pay their employees using electronic money instead of using cash, with the matching grant from the World Bank. With the African Development Bank building an ITCT park in Diamniadio, in the new city of Diamniadio, where we had this debt conference last year, and that park will help actually us attract ICT companies with all the infrastructure so that they don't have to invest in infrastructure. It will be readily made, and this is government investment, but that will be managed with the private sector. But one of the key projects we are trying to execute during this recovery plan is to have, the real postal addresses. Because today, when you want to ship something to someone's house, it's very complicated. You'll say, go to this building, there is a big tree, nearby, and then when you turn left, you can come to my house. But now we want to make sure that on the roads we have the numbers with the geolocalization, so that the e-commerce can really develop in our country. And on the African continental free trade area, huge opportunity. For now, we are finalizing, let's say, implementing the freedom, let's say, of services, of moving services around and goods. And later, we'll make sure that also companies can invest in one country and export, let's say, their products and services, let's say, from Senegal as far as Zambia. That will be easier in the future, and I'm sure that will attract more FDIs in our countries. But at the same time, also, we got to make sure that countries are ready. You're not just becoming a kind of importing country. You have to take advantage of the situation and be able also to export so that it becomes a win-win for all.
Thank you, Minister. MD, we talk about 2021 being a turning point. Are you confident that it could be the turning point for developing economies? And what would you say is going to make that happen?
Well, it is up to us. What is the legacy we will leave from next year? We saw after the global financial crisis, the legacy is a strong banking system, and it is serving us very well today. The legacy of this crisis has to be more resilient societies. And more resilient world is not one in which the accordion of opportunities opens up more broadly. So we have to make 2021 a year in which we zero on the risk of that accordion opening. And yes, I am optimistic. I think that I actually agree with Michael that this crisis showed to us we are interconnected. We are as strong as the weakest link. And I do believe that you would see next year more global cooperation and more attention domestically, as we heard from the minister, on the right policies to make economies stronger. But it is a book that is not yet written. And it is a book that each one of us has responsibility to hold the pen and do it right. I was listening to Michael thinking, when you talk about K-shape, thinking of The Tale of Two Cities, Dickens' book. Well, you have The Tale of Two Cities, you have discontent. So in everybody's interest for us to cooperate, and I take it as my responsibility from the IMF to build that cooperative spirit, to drive this commitment to building resilience, building forward, not building back, building forward with an eye on the developing world is a world of opportunity. This is where the growth potential is. This is where the young people are. Equip them with what they need to perform for them and for the rest of us.
Thank you, MD. We've got about 8 minutes left, so I want to go through everyone again with some closing remarks and just a final question. Nyananzai, I spent so much time in the informal sector, and I've been looking at the impact it's had on one of the most important drivers of economic activity on the continent, and perhaps one of the most largely ignored and the most vulnerable. I wonder what you think the future is going to be for the women that are selling eggs on the side of the road and the men that are fixing the shoes. And I think about these people because these people actually are honestly so important in the greater scheme of things. So Nyananzai, I'd love for you to weigh in here and some closing remarks for me.
Thank you so much. We are not a statistic, neither are we a footnote to a report nor a photo as African women and our children. We are real, we are innovative, we are creative, we have solutions. And what we need is the vaccine. We need the vaccine to everybody so that the women on the market can continue to sell, knowing that they are healthy. Currently, we are worried about the nationalistic approach that is there with the vaccine. The market women cannot go to the market if they are not healthy, if they are not well, if they are at risk. We need that vaccine just as much as everybody else needs that vaccine. We need fiscal space for our governments and our governments to negotiate not only through the executive, but with an accountability to the people. We need greater role of parliaments for oversight. We need greater role of plugging the leakages in our economy, tax evasions, corruption, illicit financial flows outside the country. Africa is rich. Africa is filthy rich. It's a question of decisions, and it's a question of choice. It's a question of options, and it's a question of implementing the continental instruments that we have. Definitely, we look forward to a stronger reformed IFIs that continue to put people at the center. And indeed, with climate justice as a driving force. Thank you very much.
Thank you, my sister. Mr. Kramer, so there's two questions. What do you ask, an economist when you have him on a panel? I guess for me is like, are we heading to a debt crisis, and are you worried? And number two, just on the vaccines, because I think this is really important. Aspen is a South African pharmaceutical company that has now signed a deal with Johnson & Johnson to produce vaccines on the continent for the very first time. And we're talking about distribution and access here. And I know the MD, before we started, we were talking about generics. How do you see that playing out as a scenario? So there's two scenarios for me, if you could comment, please.
Right. Countries have taken big hits, and first on the debt issue, and some countries are getting into debt problems. And as the managing director said, in some cases, this will be just a matter of restructuring the timing of payments. In other cases, there may be need to address some of the deeper issues. I take the minister's point that different countries will have different needs, and it makes sense to address this on a case-by-case basis. On the issue of access to vaccines and I think one thing that we've seen in this crisis is there's many different approaches to vaccines. Some companies are pricing at very different levels. Partly that's because different technologies are involved, but also different companies have made different decisions. So some have said, we're going to do this on a nonprofit basis, and we're going to make arrangements for this to be produced internationally. So, for example, Serum, you cited one example. Another example is Serum Institute of India is producing basically the AstraZeneca vaccine under license, and they'll be selling at $3 a dose. So compare that to $20 a dose in other cases. We're a friend of mine who's a vaccine expert. You're asking me as an economist, but a friend of mine who's a vaccine expert said, people were asking him, which vaccine should he take or should I take? He said, take the first one that's available. And I think that's really true. I've actually done some calculations with epidemiologists on this. trying to figure out really, this is a situation where you get the vaccine a few months earlier, you're protected those few months. So rather than try to say, oh, which is the ideal vaccine to take, whatever vaccine you can get, you should try to use. Now, I think the expansion of production at low prices is really vital here. And luckily, we've seen that a number of deals that allow that. And I hope that will allow increased access. But we need still.
Thank you. Honourable Minister, quite a few African countries have not signed up to COVAX. It's a big issue in terms of whether African nations have been able to place orders and make payments. Do you think that this is going to be an important one to watch? And where does Senegal stand right now?
It's going to be very important to watch. I believe we have not decided yet which vaccine that we will be taking. I know internationally we have had some discussions, in particular President Macky Sall, with the various partners to see how to mobilize the resources so that Africa can have the vaccines also at the right cost and virtually, if possible, at the same time than the other developed countries, even if that's a challenging situation. That's why for us in Senegal at least, and I think in many countries, we are trying to be again more disciplined as well in terms of respecting the barrier gestures. We managed to bring down the number of cases drastically from a peak of almost 200 to 5 cases per day. But we are seeing recently an increase again of cases, and we are taking tough measures in terms of obliging people to put the mask and to respect the barrier gestures. Whenever we did that, we managed to really resolve the situation. But we have to plan for the vaccines. But before I conclude really, Eleni, I wanted to emphasize one particular point. The MD mentioned it, mobilizing new resources for Africa to still face the pandemic, but also the recovery. And I want to emphasize the need of the new issuance of SDRs, like it was done in 2009, but this time $500 billion, I think, but with a voluntary reallocation of idle SDRs from the G20 countries to the most vulnerable countries, in particular in Africa. And that will help us get new resources without taking on new debt. Because so far we've been taking on new debt. But with the SDRs, it's almost kind of free money, and G20 countries have a lot of it. If there is a new allocation, they will take again maybe 90% of it, and they don't need it. It's idle. How can we move it to the countries that need it without therefore increasing the level of debt? Thank you.
Thank you so much, Minister. And literally that was what I wanted to ask the MD, because we see so much resources. We've got resources, global resources are available. How do we mobilize them? How do we get that money flowing into low-income countries and developing economies? MD, over to you.
Well, in March this year, I actually called for that leaning forward with SDRs. Meanwhile, we have mobilized SDRs from advanced economies to transfer them as concessional financing. This is how we managed to triple concessional financing and deliver this year. And certainly this is one avenue we have to continue to explore and pursue, work with the membership so it can be done, because there is a financial gap to be filled. We put a price tag on it for Africa. Sub-Saharan Africa 2023, 290 billion financial gap. If we are serious about meeting the SDGs, if we are serious about growth. So gap to be filled in a way that is cooperative and creative. And I want to thank the Minister for recognizing that there are still tools we haven't used, and we have to fill this gap. Everything has to be on the table, and we need to move with all the capacity we have. There will be a financing for Africa meeting in Paris in the spring. President Macron called for it. We actually have been mobilizing with Africa a series of meetings, and it would be a very good moment for us to stand up and be counted. I will be there and I will stand up.
Thank you, MD. What an honor to hear you speak. Thank you for your insights. Thank you, Honorable Minister. Thank you so much, Ananzai. And thank you, Mr. Kramer. It has been incredible. I hope to see you in person soon. I want to be back in Dakar, Minister. I was there last year, as I said. I want to be back traveling across Africa again, telling the stories that matter, and of course, following the MD as well as she makes waves and changes the way the institution is run. I am so grateful to all of you. Thank you so very much.
Looking forward to welcoming you to Senegal. All. Thank you.
Thank you very much.
Thank you very much.
Thank you. The technical team taking over. Thank you so much to all of you for watching.
Merci beaucoup.
Merci.
Thank you.
Thank you. I didn't know what to do. I was just trying to like stay smiling. Thanks, guys. Sorry I went over. I hope that's okay. You know what? I'm just shaking up the IMF rigid kind of like seriousness, you know, like just going over the time.